Welcome back to U.S. Farm Report. Back in the studio to talk markets with Dan and Arlan. Dan, in the last roundtable, Arlan was saying weather is the story right now. When you see where prices are, you see how tight some of the situation is because of the loss of acres and some of those crops. What's your advice for farmers right now as we enter July?
Well, I think as we watch the weather markets very carefully, it's key. But I would also offer that if you look at new crop balance sheets, whether they're soybeans, wheat, or even new crop corn, they continue to tighten. So I don't see an end to the multi-year bull market that we've been in. That being said, I think harvest lows will be far above where they were last year, maybe $5.80 to $6 in corn, maybe $13.50 or $14 in November beans. The wheat market looks like it's already in the process of starting to form some seasonal lows based on what the world wheat market is doing. So as I stand back from it, I think weather is very important. A bushel of yield means a lot to Chicago markets every day. We're going to see a lot of volatility. Farmers probably need to be a little patient here, but I do think we will see higher prices longer term.
And it's hard to create a strategy from a feed user's standpoint too, Arlan. But now that we have the latest look at hogs and pigs, now that we have the latest look on cattle on feed, is there anything that's changed with these livestock numbers that could support some of these livestock prices in the months ahead?
Well, I think the biggest problem for the livestock sector right now is what's happening in the economy and the fears because consumer sentiment, consumer confidence, both of those surveys have seen that consumer confidence just really plummet of late. We've got to get that picked up. We've seen some amazing pickup in cow slaughter or cattle slaughter here in recent weeks. It's been very impressive how all of a sudden we're getting past the packer capacity issues, and on the hog side, we're starting to see some declining numbers that are helping support things. But cattle, we've got a few more months to go. We've got record fawn feed numbers, and then we start to decline numbers. But our biggest threat ahead of us is what's in the economy and the fact that the consumer may, according to M2 money supply and currency and circulation, the stimulus is still in the system, but the consumer doesn't want to spend it. In fact, we saw that in the data that came out earlier on Thursday morning, where inflation is kind of flattening out, but still at high levels, but consumers are pulling back on spending, only increasing consumer consumption spending a couple of tenths of a percent month on month.
Yeah, Dan, so do you agree that is the one factor that's changed? Because inflation, it's been a story now for a year. It's not like this is catching the markets off guard, but we have seen some pressure in some of these major commodities because of this talk about recession. So what has changed that also has changed the mood of the markets?
Well, that blunt tool called the Federal Reserve in terms of what they're doing with interest rates. And again, we can't bring more supply to the market, but what we can do is try to hammer on demand. And that's that blunt instrument that the Fed is doing in terms of raising rates and taking inflation expectations lower. I would agree with Arlan. I think that's right. And I think you do have to see the economy, but we're not in a recession today. So it's hard for me to cut demand until I really start to see recession, but the markets are anticipatory. So they are worried about the future and they need to see demand stay the same or increase if indeed there's peak confidence coming forward.
Dan, what is the factor? What is the sign that we'll know that we are in a recession?
Well, I mean, by definition, it's 2 quarters of negative GDP will tell us that. But again, when I look back in recessionary views from the agricultural sector, grain demand or meat demand tails off a little bit, but not very much. And so I go back to the Great Recession of 2007 to 2009, world wheat corn demand was basically flat. That means we're not increasing, but we didn't go down. So again, food is a little bit insulatory in terms of what it means in recession. But again, when we've got fund managers that are excessively long in a lot of markets, they sell out things in the fear of the future. And that fear is now what's dictating price here today.
Arlan, Dan, thank you so much for joining us this weekend. We need to take a quick break and then we're off to the fields of Nebraska next.